Tariffs. I mean, I don't know how you start anywhere else on a day like today, because the big question is, when you own so many businesses, when you have so many types of debt and equity tied to companies around the world, how do you think about the way this is evolving?
So I'd start with us. The good news is we don't own a lot of businesses that export physical goods into the United States at scale. So that's helpful for us. But of course, as you point out, we're big investors and lenders to lots of companies, and markets impact us. And what I'd say is we try to take a little bit of a longer term perspective, that there is tariff diplomacy going on, and that what is happening now could change depending on what market participants, what government officials do. And you've got to take that longer term approach and hope, or maybe expect at some point, that they'll get to outcomes, markets will calm, and actually in a moment like this, you look around and say, are there good businesses that are now on sale? We can deploy capital into this volatility. So I would just say to investors, be a little bit patient here. Let this tariff diplomacy play out a bit.
So big picture as well, people are talking about a return of the deal environment. People are talking about the return of an IPO environment. In the IPO space in particular, it's been almost stunning how slow it's been this year. Isn't it a big problem if this doesn't come back sometime soon? There are a lot of companies out there that have been holding assets for a long time.
Yeah. The IPO market and the M&A market, as you know, Shonali, are pretty cyclical. And we've been through a rough period of time, right? We saw the cost of capital go up globally as rates went up a bunch, as central banks tightened to fight inflation. We saw spreads go up a bunch. Market participants became cautious. We had a regulatory environment that was not that friendly towards M&A activity, particularly from strategics. And I think we're beginning to see a lot of that change. We've seen credit spreads tighten a bunch, both investment grade and not investment grade. The stock market, even with this recent trade-off, I think is up about 50% from 2 years ago levels. I think there's a pent-up desire to do transactions. And IPOs, when you have a stock market trading well, it's like a magnet. It starts to pull companies in as well. We've got a number of businesses that we're looking to take public this year. I think there's a receptivity to IPOs. But volatility, like this week, can slow things in the near term. But if you said, look, 24 was an increase both in IPOs and M&A over 23, I think you'll see the same thing in 25. And there's sort of a mean reversion in terms of activity levels, IPOs or M&A as a percent of the public market's value. And we're below that. And there's just a lot of pent-up demand looking for liquidity. I think it will come. I think high-quality businesses want to be owned in the public markets. And this week it may not feel as good, but I think when we finish the year, it'll be a better year in terms of activity.